Time now for the word on Wall Street. Top investors watching your money. Joining me now is Bolvin Wealth Management Group President Gina Bolvin. Also with me is Luke Lloyd here on set. So, Luke, I'm going to start with you, and let's talk about Apple. The company says they're going to gradually roll out new AI features over the next few months into next year. You're not convinced Apple is going to be a leader in AI, and you're saying they could break up their businesses. Yep. So what's going on here?
A lot's going on here. So AI, as I've said before, is a winner-take-all kind of game. Whoever develops the best mind, the best software is going to stay ahead. And I think just Apple's a little too far behind to be one of the current leaders. And if they're not a current leader, they're not going to be a future leader. They're also partnering with all these other firms like ChatGPT or OpenAI. They're not developing a lot of things inside their own businesses. And they are trying to compete with the NVIDIAs of the world, trying to develop their own chips and trying to get into the data center space. So what I think is going to happen is they do $400 billion a year right now, or so, right, a little bit below that in revenue. When you do that much revenue, when this AI kind of mentality, you're developing semiconductors, when they're such a small part of your revenue, even if you increase that to a couple billion dollars or $10 billion, it doesn't do much to the actual top line or bottom line. So what I think is going to actually happen here to deliver shareholder value over the long term, to give it a higher multiple, to get it investors more excited about Apple, I think it's very possible we could see Apple split up just like AT&T did in the 80s. Just like Hewlett-Packard did, just like eBay and PayPal did. PayPal was the growth area of eBay. I think you might actually see a spin-off of the innovation side of their business, AI, semiconductors, and that's actually going to deliver shareholder value. Most likely will deliver shareholder value. That's what would get me excited again about Apple.
It's interesting too, Gina, what he's saying, because not every company is going to effectively use AI. The technology is very exciting, but I was always more interested in seeing AI in the manufacturing sector and consumer products. The back end, it's the warehouse at Walmart, for example. But AI is not the end-all, be-all for everyone in the space. What do you make of this?
Well, I think AI has been a tremendous tailwind for the market, and that's one of the reasons why the market has done so well this year, particularly tech. But there's going to be some winners, there's going to be some losers, but it is a great underpinning for the market, and it's one of the reasons why we're bullish.
Interesting. Also, I want to talk about inflation with you, Gina, because I'm seeing your notes about it. But first, let's look at the 10-year right now and the yield on that as we talk about these comments that came from Neel Kashkari. So the Minneapolis Federal Reserve president said that the bank is in good position to take its time with cutting interest rates, take its time. And then he says more data is needed. Now, we're going to hear from the Bank of England on Thursday. They are expected to hold interest rates steady there. But I want to go back to Kashkari because, and as you mentioned in your notes, CPI and PPI, a little soft. We had better than expected reports, lighter than expected. So if it's an inflation story, then that would signal to me that the Fed should be, looking at September. And the market took that as well, and the market took off on the news. But now you've got Kashkari saying, well, we can be patient, we need more data. So that tells me he's looking at December.
Well, I don't think investors should be making a decision on what to buy based on what's going to happen in 2 or 3 months or by the end of the year. And is 25 basis points really going to affect stocks that much? I don't think so. I am encouraged by the CPI. We've had softer than expected data, but the Fed is going to have to see more than just 2 months of soft data. I think what's really interesting about the CPI that came out is that it was softer than expected, yet housing, which is the biggest component of CPI, it didn't come down. And if you substitute real-time housing data for owner's equivalent rent, you're going to see CPI coming down to 2%. And we have seen some dovish comments by Loretta Mester, Austin Goolsbee, and it's just going to take a little bit more time, but inflation is coming down, and I do think we'll see a cut this year.
I think the tough part, though, Luke, in particular with CPI, is the shelter component, to Gina's point, but that's where the interest rate cuts do play in particular for the housing market. And so it's not just so much the signal to stock investors, it's more that this could actually unstick housing and really kind of juice up the economy. And that's what I think. That's the other side that the market would like to see. We could go higher. Things could get better by the end of the year. for the markets if that component kicks in?
Well, it's actually interesting. The 10-year Treasury, the bond market, has already discounted, I think, a couple of rate cuts being factored into this. We saw the 10-year Treasury trading close to 5% just a few months ago. I think it's like, what, 4.25% now? Like, we've already dropped 75 basis points from the top of where it was trading. I think that gives you a lot of insight. Mortgage rates have already come down the past couple of weeks. So a lot of this could be already priced in, which could spark more demand in the housing market. But 30% of people's net worth is tied to the housing market. As long as the housing market stays high, people can borrow against their house, home equity line of credits, spend money, and then do a home equity line of credit, whatever it be. People feel rich right now because their assets are inflated. But the question becomes, what happens when you lose your job? What happens if those assets come down? That's what you need to pay attention to.
Yeah, well, when you're seeing, Gina, we'll leave it here, but Gina, when you're seeing, the wealthier consumer go to Walmart for their groceries, that tells you something. And savings rates are down.
Yeah, it does. Yeah, it does. I mean, you are starting to see the consumer under pressure, and that is slowing demand, and that's what's also, unfortunately, going to help bring inflation down.
Yeah. Gina, it's always good to see you. Gina Bolvin.
Thank you.
All right, looks good to stay with us all morning long. Coming up, nearly all 50 states are providing voter registration forms to migrants without requiring any